Lincoln Mitchell. Let's do some training today, y'all. RSI indicator. Yes, that's true. I don't use indicators. When I first started out, I used to use indicators, and the RSI was one of them that I use. But one thing I want y'all all to understand, regardless what indicator you use, or oscillator or momentum indicator, you must learn price. That's just the bottom line. I hate to tell you that. It was developed by J. Wells Wilder, but I just want to point out some things in this one. We're gonna start right here. The relative strength index (RSI) is a technical indicator. Basically, y'all know what that means. It's using price. See that historical price. Used to analyze of the financial market. It is intended to the charts to the current and historical strengths or weakness of the stock or base or market based on the closing price. Remember that it's based on the closing price. That's very important because we're gonna skip around here. We're gonna jump down here. The RSI computes. I want y'all to understand that computes momentum as the ratio of higher closes to lower closes. Let me slide this over. Lower closes, stocks which have more or stronger positive change have high RSI than stocks that have more or stronger negative changes. Okay, now let's get to one more. The RSI is mostly typically used on a 14-day period. All right, let's break it down. First of all, the RSI. How do you, most of y'all should already know this. You go to your studies. It should be on this one. All right, so we added the RSI. As you notice, this one is actually defaulted to 730. So 70 represents overbought, 30 represents oversold. Now, people, one thing about that I want y'all to understand is you can always change that setting. So when you go here, you change that settings to 730 to 820. You must go back and also go back and see which time frames those work on. See, the problem is you're not problem solving these indicators, and I think that's one of the biggest problems people are having. 730 might work better on a 30-minute time frame. 820 might work better on a 5-minute time frame. Y'all must go back and troubleshoot all these indicators to see the flaws and the benefits of each time frame. There's always a sweet spot in trading. There's always a sweet spot. You're going to have to find that sweet spot. All right? So let's get to this. We're going to set this at 730 right now. We're just going to leave it alone. Now, one thing I want to point out. Let me see if I can find one. All right, this is good. This is good, right? That candle there. Okay, nope, that's not good. I want to find something interesting for y'all. I'm looking for something. All right, this is perfect right here. You see right here, it's at 68. This is almost overbought, right? Now, if you notice, this candle closed at 22. But look at this candle. This candle also closed at 22, but the RSI is way down to 61 versus 68. Remember that definition where it says it computes then closing of recent trading periods. All right. See, that's one thing y'all making a mistake on these indicators is there's nothing wrong with indicators. This one big red candle right here, once it dropped, it averaged it out. Since we have this one on what, 14, we have this one on 14. So every 14 candles, so start here. This is 1, 2, 3, 4, 5, 6, 7. You know, you get the point. And if you change this, now, I'm sorry, it said 14 days. It means 14 candles. Always remember that. Not 14 days. If I'm on a day chart, then it's 14 days. If I'm on a week chart, then it's 14 weeks. If I'm on a 30-minute chart, then it's 14 30-minute chart, 30-minute candles. Are y'all following me on that? Most of the time, a lot of them are just defaulted to a 14-day moving average. Same way with SMAs and EMAs and so forth. They just defaulted, but you can always tweak it by changing that time frame. Do you understand what I'm saying? It goes back 14 candles, people. Remember that. 14 candles. Don't get in here and say, oh man, it went all the way back 14 days. No, that's not what it's saying. It's saying it's representing 14 candles. If you go in here, you can change it to 2 candles. All right. But let's get back to this. I want to show y'all. This is a good one. Let me see. No. Yeah, actually it is. This is a good one as well. Now, right here, if you notice this candle right there closed at 64. That one closed right at 64. Right here. Now, you notice at 64, the market was overbought. But now, look what happened. Once this market returned back to 64 right here, it's not overbought again. Why? Because it's averaging out. And that's one of the things I think y'all need to be very, very wary of. Be careful with that. Now, when the market drops like this one thing that kills me with people is when the market dips all the way down like this. I'm going to use right there. On this calendar here, the market is representing as being oversold right there. Now, this was going to happen to a lot of y'all in a situation like this. You're going to buy that. But if you notice, look, the market kept going. So after this candle, which is it this one? Yeah, it's this one. Right, it's roughly right there between these 2 candles. So this market already showing oversold at this period. Most of y'all are going to buy that. That is a horrible move because now this market just went from here all the way down. Oh, ouch. Damn, that hurt. Because remember, CL is $20 per tick. So let's pull this over. I'm trying to pull up my other screen. I don't know what happened to it. Oh, I closed it out. That's what happened to it. So CL is $20. I mean, I'm sorry. Did I say 20? $10. I'm sorry. $10 per tick. $10 per tick. CL is $10 per tick. So this thing closed at 25, right? It closed at 25, 26, closed at 26. It went all the way down to 57 off one contract, people. Off one contract. Did I say that right? All the way down to 57, right? That hurts. Off one contract, people, you're down $700. You are down $700 off one contract. That's the minimum you're going to be down. And the reason being, most of y'all are not studying price. It's very obvious with this congestion area here. There was some kind of price that the market was going to. That's why once you're doing these RSIs, now the people who sold it at this point, they were good. It made, let's say for instance they bought it. I mean, they sold it here. They sold it going down. And once it hit this line, they got out. That's pretty interesting. That's good. But what about the people that say, oh man, as soon as it hits this? That's why I always tell y'all, never buy the lows and never sell the highs. That was a $700 mistake. Remember that. That was a $700 mistake. So let's fast forward it. Now let's take this area right here. Once the RSI got here, you notice it's not overbought or oversold anymore. It actually came out of there. Now this level here is good because the market is computing. Remember that, people. The RSI is a good tool. Like a lot of indicators, oscillators, you have to know what's the kinks in those tools are. What's the kink in the armor? Remember that, because that's what the market's going to do to you. The market is going to look for your soft spot, and that's what it's going for. Okay? So when y'all doing these indicators, start learning how to incorporate price into using these indicators where you say, you know what, there's a price line here, price line here, price line there. So even though this is showing overbought or oversold, I know there's still a price area here. So I need to wait for a second and let it go. Now, once I see it dip down, let's use this one. Where's this price at? Okay, let's use this one right now. Let's go update. Okay, update. Now, I know for a fact there is a price somewhere way up there, like what you call it? I can tell you. Hold on, I can tell you exactly where that price is. Right there. Look at there. Right there. 59.22. I know for a fact there's a price there, right? Now, if this thing was already overbought here at 56.92, what happened if that thing was? I mean, that's a long way. That's about 300 ticks, I think. I don't know. About 300 ticks. So, so that's really going to exhaust the ATR on the day. But all I'm saying is, people, if you know where these prices at and you're using these tools and you see this tool start gradually going up, they go overbought or oversold, you can use that to your advantage. You can say, okay, I know there's a price here. I think that's where it's going. You don't sell the high like that, because a lot of y'all want to sell this. And everybody who sold this right here, look, y'all got decimated, man. Y'all got killed. So if you sold it right there, if you sold it right here at 69, it went all the way up to 99. So 69 to 99. Let's see. Let's do that one and this will be it. 69 to 99. That's $300, people. That's a $300 mistake off one contract. People, pay attention to what you're doing. That's all I'm saying. I'm not saying nothing wrong with the RSI. I'm not saying the RSI is the holy grail. What I am telling you is find the chinks in the armor to what makes the RSI good or worse. That's all I'm saying. All right? Lincoln Mitchell.